In this video, I'm going to be showing you how I made over $67,000 in a single month during an altcoin season, just like how we're seeing today. I'll show you the exact mindset of what was happening during my trades, what was happening in the market around this time. My personal trading strategy when it came to getting these profits, it is high risk, but it did work for me and it worked for this type of market that we're seeing right now. And in this video, I'll show you the key takeaway and lessons as well to avoid huge losses and have a higher probability of actually winning your trades. And by the way, guys, my name is Ken the Crypto. I've been trading for over 8+ years now, closer to 9. I've been through multiple crypto cycles, made over 7 figures, lost it, made it back again. So subscribe if you want to learn how to trade and invest in cryptocurrency and some crypto meme coin alphas. Now, I want to get right into it. Here's my screen. Here's my trading calendar on OKX. So I'll just refresh that. So I'll go by June 2024. As you saw, I really didn't trade that month. I did trade one position. I lost it, and I was like, you know what? Might not be the right time. And so in July 2024, literally last year, same month, last year, which we're seeing a bullish month right now. Last year was also a very bullish month, and I believe it's the same patterns that I'm seeing based on the data that I'm about to show you. As you see, I won pretty much most of my trades with a total P&L of $67,300 with a win rate of over 78%. And by the way, if you stick towards the end of this video, you're really going to learn a lot of basic meme coin trading, leverage trading. You're really going to understand why right now is the best time to trade crypto from now until the end of 2025. Like, we literally have this window of opportunity to make a lot of money, even without a lot of experience, as long as you risk correctly. And again, when it comes to making money in crypto, you really do not need a lot of experience. You don't need a lot of time. You just need to learn the right strategies, the right mindset, and the right timing. Again, I want to share you some context because what I did here last year and why also I think it's very relevant right now is because, again, we're seeing the same patterns in the market. And that's why at this stage, I'm leverage trading. I really only leverage trade when there's right opportunities in the market. And I really only trade meme coins when there's right opportunities in the market. I said this in plenty of my short content in which trading in crypto is all about timing. If you want to profit big, it's all about timing. Sure, you could profit even on a down market, but you're not going to profit as big compared to if you are trading in the right circumstances. And that's why I believe a lot of people lose money on trading, is because they try to force trades even though the market is not in their favor. But right now, the market is in our favor. Again, I was extremely rusty at leverage trading. I was not even experienced at leverage trading. I know the basics. However, I do know market fundamentals because I've been in crypto for over 8 years now. And right when I saw an altcoin season start to blow up, which is what I'm seeing right now, that's when I saw a lot of opportunities when it came to trades. Now, here's the 4 strategies I use when leverage trading in a bull market. And by the way, again, this does not work in every market. This does not work in a bear market. This works when the market is bullish, when there's an altcoin season brewing up, when Bitcoin is consolidating or pumping. So number 1, I rode the trend, right? This is basic fundamental analysis. When the market is long, right? When it's very bullish, when there's a clear signal that there's altcoin season brewing up, then the only thing that I really want to be doing is taking longs, not shorts. Because why would you fight the trend? And of course, that's another strategy that some people use is they do reversals. However, for me, I was just riding the overall trend. I'll show you some of the signals that gave me the green light to start trading because there was a lot of opportunity showing up. So if we go right here, on the Bitcoin season, altcoin season index, you could just you could Google it or you could go to CoinMarketCap. As you see in June, we pretty much reached a local bottom of the Bitcoin season. And I saw that the Bitcoin dominance or Bitcoin season was going down, right? And which meant altcoin season was starting to go up, the beginning of July of 2024. If we fast forward to right now, it's the exact same thing that's happening. We had a local bottom of Bitcoin season towards the end of June, and it's slowly going up in terms of the altcoin season. Again, July 2024 last year, it started to reach within this altcoin season zone. Ideally, once you start to see the market go right in the middle of the zone, I believe that's the best time to start looking at really small cap altcoins. This is really the time right here in the middle is when you start looking for new altcoins, because this is really where the new gems were made. This is when Chill Guy was made, Moodeng was made, Peanut was made, Fartcoin. Really, a lot of the top Solana meme coins that launched back in November 2024 was in the middle of this zone. And so keep that in mind. Now, I'm also constantly looking at the Bitcoin dominance chart. The market is basically telling you that the money is going from Bitcoin. Now, the only thing that I was looking at the Bitcoin dominance was these red sell-offs. These red sell-offs. Now, what these tells me is that a lot of the money that was in Bitcoin started to flow from altcoins because people were moving their money from Bitcoin or maybe taking profit from Bitcoin and then throwing it into altcoins. This is really where you're going to see huge opportunities when it comes to trading, if you're going to trade meme coins. And so I saw that dominance was starting to drop pretty fast on the 4-hour, the 1-hour chart. And that was a pretty good enough indicator for me that, okay, the altcoin season index is right in the zone. The Bitcoin dominance is starting to fall. And that's really when altcoins started to run up. Now, if we fast forward to right now, July 2025, we could see that it's printing some reds. We could see that the Bitcoin dominance is falling. Earlier this week, it was at 64%, and right now it's at 62%. If it keeps falling, then we're going to see a really massive altcoin season, and a lot of trading opportunities are going to show up. If we look on the one-day chart as well, you can see these points right here in which Bitcoin dominance started to fall. These were the best times in which people made money from meme coins or altcoins. Back here in May, during the first few weeks of May, November, we saw a sharp drop right there. That's when we saw a huge altcoin run. And perhaps that is what we're seeing right now. And so really, I was just riding the trend. It was an altcoin season. The signals were there. And so the logical thing to do was take a lot of longs. Now, I also set my entry and exits at supply and demand areas and fair value gaps. And I'll show you what this is right now. Now, one of the pairs I was mainly trading was Pepe, right? Again, this was a big meme coin. Most of the traders I was trading on leverage was mostly top altcoins. So in simple terms, a supply area is basically the price area where a lot of sellers are waiting to sell. It usually happens before a big move. And a demand area is usually when buyers are waiting to buy. Like that's a zone where people are waiting to buy. These are usually the areas where you're seeing a lot of wicks happen. So for example, if we go right here, as we see like this right here is a big move. This is considered a big move, okay? This would be a demand area, right? So around this zone is where people are looking to buy. This right here could be also considered a demand area. It's not a big one, but it's still a demand area. So this is where people are looking to buy. Again, this right here is a big move. Again, right here is a move. People are looking to buy. I'm simply marketing it. And so where I would take my entries, you could even make it as simple as look for the wicks, because those wicks are usually the areas where market makers are hunting for stop losses. These are basically the areas where people get liquidated. And so ideally, I would take my positions right in the wick or slightly below it. You don't know how strong the manipulation can get. And so these are usually the areas where I would take longs in. Where I would take sells in is in the opposite of that. And so if I look on the left, we see an area right here before the big move. It usually happens, at the top wicks. I would take profit from there. These are potential options that I can exit my trades. Here as well, again, it's before a big move down or up. In this case, these are the potential areas that I would take profit in. This would be the supply, again, where people look to take profit. Supply, where people look to take profit. Demand, where people look to buy, and so on. And so this is very simple. You basically just mark the top, the bottom. Now, fair value gaps. And what a fair value gap is, it's a stretch on the chart where price pretty much shot up or shot down. And basically, there's no trades happening in between. So I'll show you another example. This right here would be an area where the price shot up. And basically, there was no really anything that was happening. It was just all up, right? And there's an empty space right there. That would be a fair value gap. Usually, when it goes up like that, the price usually goes back in the middle. It touches it before it makes another move again in the other direction. Now, price usually never always touches this, but most of the time it does. So for example, as you see, price shot up. There's that fair value gap right there. It went back down. As you see that wick, it did touch that fair value gap, and then it kept going up. And so whenever I saw opportunities like that happen, I would most likely wait for a pullback to happen right in the middle of that, take my long entry, and then ride the trend again. Again, here's another example that happened on August 2024. There's a huge sell-off. There's that fair value gap right there. Price came back to touch it, and then it kept going bearish, right? Short term, of course. So I just wanted to showcase what a fair value gap is in a bullish and bearish trend. Again, if we fast forward to today in Pepe, as you saw, we had a big run-up right here. We saw that there was a huge gap right there. And we also see that with Pepe right now. We saw a huge bullish candle. It left a gap right here in the middle. Price went up. Price came back and wicked at that fair value gap and then kept going up. And so you'll really see this with a lot of huge candles where price usually goes up hard, pulls back in the middle, fair value gap, and then keeps going up. And of course, I didn't follow this religiously. I kept it very simple. I entered at demand zones. I exited at supply zones. Like that's where I set my entries and exit. Fair value gap was not my priority, but it was an option. It was an opportunity when it presented itself. Again, I would enter below stop losses. The easiest way to find stop losses is if you zoom out on a bigger time frame, you will usually see huge wicks. This is really where the stop losses are, right? So if we mark it with a horizontal line, boom, we saw stop losses right here, right here, right here. The market has a memory of these stop losses. This is really where market makers like to liquidate people. And so every time I wanted to be a bit safer, less riskier, I would take my entries right at that wick or a little bit right below it. And if I miss that entry, then I'll just take the entry at the wick. I would also sell at the previous wicks. Again, that's where market makers look to liquidate people in a short position. And when I do profit, I move the stop losses a bit above break even. And so let's say with Pepe, I took an entry at the stop loss. I took an entry at the wick, the stop loss. And let's say I rode that trend up because I usually like to swing trade, right? Where I would hold my trades for multiple days, even a couple weeks. If I start seeing huge profits, like a big candle up, that's really when I'll start taking profits. I'll take 10%, 20%, and I'll move my stop loss right above break even. And so if the market does go down, I'm still in profit, or at the very worst, I'm in break even, and then I didn't lose anything at all. So basically, that was my simple strategy. I rode the trend, fundamental analysis. All I did was take longs. I entered at demand zones, exited at supply zones. I entered below stop losses, or I took exits above stop losses. When I see huge candles running up, I start to take 10%, 20%, 30% profits. I would move my stop loss at break even. So if the price does go down, I'm still in profit. Perhaps I could re-enter that trade again if I see a good opportunity. And so with all that said, here's really a key lesson I learned from that month of making $67,000 and really the other future months where I profited big. Of course, I had losing months, and I'll share that in the future videos. Key lesson number one is you want to select one or two altcoins, in this case for me, meme coins, to trade, where you're comfortable putting in a heavy bag, and another one or two meme coins that you can put in a small bag and risk a bit more. I'm hedging between high volume projects, high volume altcoins, and a bit lower volume altcoins, right? With lower volume altcoins, it's a high risk. They're heavily manipulated, but you can profit big, especially when there's an altcoin season. And so as you see here, I risk a little bit with more altcoins, or I risk a lot, or I had a big position in one or two altcoins. And in this case, I had a $5,000 day in which I only had 3 positions. 1 or 2 of that was big meme coins, the safe bets like WIF, Pepe, Doge, and then a few small meme coins that was available to leverage trade, usually under the $100 million market caps, because you can still leverage trade projects under $100 million market caps. As you saw, my $14,000 day was only with 3 closed position. But as you see right here, I had 10 positions open, which I do not recommend. These were most likely very, very high-risk trades. And I don't recommend high-risk trades unless you're already in profit. Because in week 2 of this month, I was already $24,000 in profit. And so that meant that I could play with more profits. And so I risk a lot more. Now, of course, I would not be starting off a month with a bunch of positions open. I would probably start with a few positions open, see if I profit from that. If I do profit, I'll play around with the profits and risk a bit more. Now, the second lesson is you want to set aside how much you want to leverage trade in total or risk. What I mean by this is leverage trading, however people want to call it, it's sort of a casino, but it's a casino in which you can take calculated risk and a casino that you have a bit more control over. Of course, you don't have a control of the market, but you can control how much you put in the game and how often you can play the game. So in that month, I was willing to risk $5,000 overall. It meant that I came in the casino with $5,000, left my wallet at home, and if I lost that $5,000, I would have been okay with it. For some of you, it could be $1,000. And if you do lose that $1,000, you're done for the week. You're done for the month. And so this is a very, very key lesson because a lot of people make the mistakes of going in the casino, not knowing exactly how much they want to risk, and they just keep adding more to the table, and they keep adding more to the game, and they don't know how much they're losing until their entire wallet or account is destroyed. Third key lesson is I took partial exits and entries. Again, going back to the Pepe example, when I saw huge run-ups, I would take 10% profit, take 10% profit, 20% profit, and I would set the stop loss at break even. Because the worst case scenario is I don't lose anything, but I'm still in profit with some of my positions. Fourth key lesson, and I believe this is huge, because in times like this, where altcoin season is good, the market is good, people are making money from trading, it is so easy to be greedy. And let's say you made $1,000 in profit, or 10,000, or 20,000, 30,000, whatever profit that you thought was great before you started trading. You're technically in a winning streak, but mentally, it starts to mess with you because I'm doing so good, I can do even better. Because by week 3, as you see by week 3, I was pretty much winning all my trade except for that one day where I lost $3,000. By week 3, I had already made over $50,000. And what happened the next day? I got greedy. I was getting overconfident. I thought I could make more. And what happened was I lost $17,000 in one day and another $11,000 in the next day. And from there, I stopped trading for a couple days, stepped back a bit, wait for better opportunities, and I was able to make that money back and more, $24,000 the next few days and $14,000 the next day. Now, I do want to say that in the 28th, there was a huge opportunity. I also don't recommend it. When you lost 1 or 2 big trades like that, you should stop trading. Like that's just my recommendation. You should stop trading. But I got lucky. I saw a good opportunity. I opened a lot of high risk positions because again, I was still an overall profit from the month. So I had some extra bags to risk and it played out in my favor. And so again, if you're in huge profit, take a step back, take a few days, a week, because you just doubled, tripled, quadrupled your initial account. And your mind will play games with you when you're in pure profit and when you're also in a lot of losses. Last key lesson that I learned from this is you really want to go for at least a 1 to 5 risk ratio because it's an altcoin season. 2x is good on a decent market, but 1 to 5 is pretty much standard, I would say, in an altcoin season. During times like these, when the market is good, you're going to see huge candles run up. As long as Bitcoin is holding its price, a lot of meme coins, a lot of altcoins should run up very well. And again, going back to the Pepe example, if I take my long position right here, let's say I entered around right here. If I move this green, this is really where I'm in profit. It says the risk reward ratio right there. It says I'm on a 1 to 5 risk reward ratio. What I've personally found with 1 to 4, 1 to 5 was standard. That's when a lot of candles start showing up. And so if I'm willing to risk $1,000 in a trade, I'm looking to get somewhere around $5,000 in profit. Again, this is not in every market scenario. This is in scenarios where we are seeing an altcoin season. So in any other scenario, all of this goes out the window. And so there you have it. That was my profitable month in July of 2024, literally last year, exact same month as we are seeing right now where the market is bullish. The market right now is in the zone of altcoin season. When we hit that middle zone right there, that's when we should see a lot of new meme coins start to show up. Perhaps a lot of small cap meme coins. That's when we also start to see a lot of small cap meme coins start to rally hard. Bitcoin dominance is also dropping like crazy. So again, right now is such a good time to be in the market. You do not want to be sidelined right now because my thesis stays strong. In the next 1 to 6 months, perhaps the end of this year, we're going to see a huge altcoin season. You want to stick around the market. You want to learn as much as you can. Watch my video, subscribe, join my Telegram. I am starting to leverage trade. I only leverage trade when there's good opportunities. I will start to share some of my trades in my free Telegram group. The link is in the description. Hope you enjoyed this video. Subscribe more to learn how to trade crypto, invest in crypto, some alphas. Kenny Crypto here. See you later.